2022 has been a painful year for everyone, especially if you have been putting all your money into Tesla. While we always hope to see our portfolio going to the moon every day, sometimes things don't always go as planned. And we find that stocks can go down after all. I feel it's also important to talk about our losses, learn from that so that we will become a better investor. So in this video, I'll be doing a year-end review for 2022 and show you how much I lost. Hints, I lost a lot. What are the lessons I learned along the way and how I plan to improve. So without further ado, let's jump right in. Let's start with my stock portfolio first. Like a true Wall Street bets guy, I started the year with super risky stocks. Back in March, 85% of my portfolio consists of Tesla, and the rest were those YOLO stocks like Square, Arcade, ArcG, and a tiny amount of the big tech. After speaking to a number of people who had more investing experience than me, I realized that this kind of portfolio is both unsustainable and incredibly risky. And guess what? They were right. So in May, I stopped buying into Tesla and sold off my ARK ETFs at a huge loss. I also had many cable viewers who were concerned that I was going to sell Tesla. Fortunately and unfortunately, I did not sell away my Tesla stocks, even though I still had around 85% allocation as of September. Given that in the short term, with all the high interest rates and potential recession going on, I had the feeling that Tesla wouldn't do well. Also, fun fact, back in June, I made a prediction saying that Tesla could fall to $402 or $134 post-split if it did crash. And guess what? That came true. Tesla is now below $130. The reason I didn't want to sell Tesla was because I did not want to time the market by selling high and buying back low, as I believe that over the long term, Tesla fundamentals are still intact. So in order to diversify away from Tesla, I decided to start buying into the big techs like Apple, Google, Amazon, and Microsoft because I felt that they had strong moats, good reputation, and a proven track record. Well, you all know what happened then. Basically, all of them jiwa boom, crashed, and I lost money. Tesla lost 100k, painful sia. Apple lost 5.5k, Google 2.7k, Amazon 3.8k, Square 5.6k. Not as painful, but still painful nonetheless. Also, just in case you're wondering why I'm showing you my portfolio on my app instead of the broker, it's not that I want to cheat you or anything, yeah. It's because the account also contains my family's investments too. So it's not just my portfolio here, yeah. Anyway, two lessons here. One, I realized it's okay to sell and take profit as long as the valuation becomes overvalued. As Warren Buffett Gong Gong said, be fearful when others are greedy. Though, it's easy to say this in hindsight. If it was so easy, all of us would have sold when the S&P 500 hit a super high PE ratio last year. So this is still something I'm trying to find a solution to. Second lesson, recently I realized that the strategy of diversifying into the top S&P 500 holdings like Apple, Google, Amazon is not that good. That's because historically, the top holdings of the S&P 500 have never remained the same. In the 1980s, the top holdings were the energy companies, which were replaced by consumer discretionary companies in the 2000s. And now, they have changed to tech companies. This means that if this trend were to continue, big names like Apple, Microsoft, and Google will not stay at the top forever. So, starting next year, I'll be buying into broad-based market ETFs, starting with the S&P 500 ETF in order to diversify. My goal is to build a core satellite portfolio, which I mentioned in another video, where 70 to 80% of my portfolio will consist of broad-based market ETFs and the remaining 20 to 30% will be riskier stuff like Tesla and so on. Yes, my returns will be much lower, but at least I'll be protected against my noobness if ever my investment thesis is wrong. Quick pause, just in case you do not know already, the Moomooot Singapore app has quite a few useful features. First, they let you stay updated on your favorite stock news. Then, at the financial section, you will see some really useful financial information. Like for Apple, you can see what's their revenue breakdown, how many iPhones they shipped last quarter, the ratios, and all the financial stuff that you need. And right now, the Moomoo Cash Plus is giving a guaranteed 5% yield. So if you put in $10,000, you earn $123 over 3 months. And the more friends you invite, the more rewards that you will get. Best of all, there's no lock-in period and you are free to redeem anytime you want. So if you are interested, you can sign up to Moomoo and enjoy all the features along with all the free sign-up rewards. And with that being said, let's get back to the video. Okay, let's move on to the next part, options. For options, I don't like those complex strategies like those spreads, straddles, and iron condors because my tiny brain finds them hard to understand. Instead, my options strategy has always been very simple, selling covered calls and cash covered puts. But this year, I adjusted my strategy a little. For Tesla, I used to sell covered calls at a 30% strike distance, meaning if Tesla is $100 today, I will sell it at a $130 strike price. That's because I want to avoid the situation where Tesla suddenly shoots up 20 to 30% within a month, and my stocks would get caught away. For this year, however, because I became a lot more bearish, I started selling calls at a 20% strike distance. Hence, the premium that I could collect was a lot higher. Also, in the past, I used to sell like 3 cash covered puts before the split, or 9 puts after the split, also at a 30% strike distance. But now, I'm just selling at 3 puts post-split, not because I want the stock, but I just want to earn the premiums. I don't mind getting assigned because I can then start selling calls to lower my cost basis. As for the rest of my stocks, I used to sell covered calls at 0.1 delta, which will give it a 10% chance of getting caught away. In fact, that happened in August and December, where the market had a mini rally upwards, resulting in my Apple and Google getting caught away. Though, eventually they did come back down, and I got back my stocks by selling cash covered puts at a slightly higher strike price. So, how did my options strategy perform? Actually, they performed quite well. Other than May, where I had a small loss because I had to roll some Tesla puts downwards to avoid getting assigned, all the other months gave more than $4,000 return. The final 2 months had returns above 10k because Tesla was basically crashing every other day, and I was able to keep rolling my Tesla calls at more than 50% profit every week. And yes, I know you will be asking for proof. So here's a report that I got from IBKR. Here are all my option trades for 2022, and I got a 124k profit in total, which sort of covered all my losses from my stocks this year. Here, I want to caution you guys a bit, because I know that some of you guys will be like, wow, options can earn so much ah. You guys will try yourself and start losing money. For all I know, I just got lucky this year. So just because I made money trading options this year, doesn't mean that I will keep profiting every year, yeah. Because as usual, I'm still learning how to invest. Lastly, cryptos. 2022 is a terrible year for cryptos. Even though I had stopped buying cryptos in 2022, I still had losses due to all the platforms shutting down. First, there was the Luna crash, which caused USD to crash. Even though I managed to withdraw and sell my USD before it crashed completely, I still lost around 5k to 10k. Then there was Celsius halting withdrawals. And since I was keeping some of my cryptos there, I still had a few $1,000s stuck in there. After those 2 incidents, I decided to withdraw my cryptos out of crypto platforms and made a YouTube post and Twitter post to warn people to withdraw from Hodlnaut. But here was my biggest mistake. I didn't realize YouTube posts had such a limited reach, and because of that, many people didn't saw my posts, and now their money is stuck in Hodlnaut, and I felt responsible for this whole mess. The next incident was FTX, which after learning from the Hodlnaut incident, I made a YouTube post, YouTube Shorts, Instagram story, and announced on Discord, telling people to quickly withdraw their money before they collapse. And I guess this time the reach was a lot wider, though many people still didn't withdraw on time. So here was what I learned. In the past, I've always said that you could keep your cryptos on crypto platforms as long as you were okay with the risk that the platform could collapse. And as we have seen this year, this risk is very real. So going forward, I will be keeping all my cryptos in my private wallets. But more importantly, I've also stopped talking about lending platforms and have removed my links to platforms like DeFi and Nexo. Not because I think they will collapse. For all I know, they may survive this crypto winter. But if they did collapse, you guys will lose a lot of money. For brokers and robo-advisors, they are well regulated. So even if they did collapse, we can still get back our money. But for cryptos, everything can be lost. However, recently I did a poll asking if I should talk about crypto exchanges, and the majority of you guys still want that. So I'll be talking about it. But I will also make sure to remind you guys to take the cryptos out of the exchange immediately after buying them, because all of these platforms are still at risk of collapsing, including those that are in MAS approval list. All in all, my portfolio has dropped from 320k back in September all the way down to 188k in December. Basically, I've lost 1 year worth of progress. And with the recession coming soon, I do expect to see even bigger losses ahead. But the good news is, this crash will not last forever, and it has taught me some very good and painful lessons, which will make me a better investor going forward. Hopefully, I will still be on track to reaching my $1 million goal by 2027. Will I reach there? Maybe, maybe not. Let's see what happens then. Anyway, hopefully you find this video useful. Like, share and subscribe, as I'll be posting new videos every Monday, Wednesday and Friday. Happy New Year guys!